So we're gonna do our chart. We're gonna look at volatility 25 index. We're analyzing these for until you get an entry. So I'm gonna share with you a simple strategy of trading the volatility indices, almost all the synthetic indices, actually all of them. Yeah. So simply, let's go to our 4-hour chart. So in here, what we notice that price has been coming down, trending down. This is what we've noted from the daily time frame. We've been coming down, creating highs and lows. So we expect price to continue doing the same thing. So this should be done from everywhere price is coming from, not necessarily from this point. Or you can do this just to see the highs and lows from wherever price comes from. So I'm just gonna do from this point or this point because it's close to where price is at the moment. So, okay, looking at it now like this, from what I've thrown here, I'm trying to show you that we're gonna get to, at some point, these levels and then take sells. But we are here now, so what is going on here? That's what we want to know. And then when we know what's going on here, that is when we're going to be able to take trades, whether to down here and then up, or from here straight up and then down. So let's go into what's going on here, which we can view clearly in a smaller time frame, which could be daily chart for the and a 1 hour chart. So the same way we were looking at price in the bigger time frame, it's still doing and creating the highs and lows, highs and lows. Okay, high, low, high, low, high, and a low. So what we can note here is that price has broken out of this structure. So we went below this low. So we had to come into order blocks around here, then go down below this level. So we had a break of structure even here from this. Yes, so we broke structure here, meaning that after we break structure, okay, this is how it goes. When price breaks structure here by coming below this low, it's supposed to go up a bit into order blocks up there and then sell. The same thing happens when it's for a buy. So if price has been going down like this, and then it goes up to break a certain or a previous low, then it has to come down into an order block again and continue going up. So this is what we've seen happening here. So price has been going down, creating the highs and lows. Yeah, this low, and then this high, which did not break this one, the previous one. So we had a low again, and then that's when we broke this high. So after breaking this, we are expecting price to come to these levels so that it can buy and continue up. So basically, everything that is happening here in our mind, it's supposed to give us a tap into this level, and then we can continue up. We'll see what happens up here when we get here. But obviously, we do anticipate price to come to this level. So with all that being said, let's mark everything that's happening here. We had a break here. If we had a break here, it means we're supposed to have entries in order blocks here, inside here. So from this point, we are supposed to analyze price from here. From this point up to here, and find a way that can take us down to this order block or continue above here, but we still have to know that we need to tap inside here. So looking at it now, we had a break of market structure here when price was continuing up, and then it came, broke this structure, again dropped and broke this one. So if we break structure here, we are supposed to get entries where in order blocks around here. Simple. So we tapped into this order block and dropped. When we dropped, we did break structure here. If you can look at it carefully, we dropped from this order block and broke structure here. Breaking structure just means anything below the low, whether it's a tip, a wick, or a peep below this low, it's our break of structure. So when we have a break of structure, we're supposed to get entries in order, we're supposed to get entries in order blocks just here. So I'm basically saying that we've been having price from here doing whatever it was doing, everything that was going on until we tapped into the order block, the main order block after this break of structure here was this one. Now, after this break of structure here, the main order block is this one. So we're supposed to sell from this point. So this is why we are actually supposed to be entering a trade here. We are taking a trade at this moment. And I will share with you the results of this trade. So a simple way of, let's get into our 30 minutes chart to see which order block exactly are we using and how do we use it as LMT investment. So inside here, I want you to know that we have, sorry. Let me just remove this and redraw it. So we have this candlestick as our order block. We also have this one, might be our order block. So I drew my order block. I actually drew my order block from the body to the wick. And then I refine it to 50% of that. So my order block would be something like this, from the wick to the body, and then 50% of that. This is not anything that I would force anyone to do, but for me, my reasons are just to minimize my stops. So whenever price is into my order block, I would like it to punch into anything above 50% of that order block, and then that's where I will take my trade. So our trade would be something like this. Yeah, we're actually supposed to take the trade here, and then we're going down. Our target is, this is the first target. This low is the first target, and the main target is down here. So yeah, I'll send through the results probably after a few hours. Yeah. So that's it, guys. That's how we trade volatility 75, your volatility, all the volatility, the synthetic indices, actually.